Welcome back to Breaking Banks. So back before the break, we were talking with Nanda Kumar, the President and CEO of SunTec Business Solutions. I'd like to invite Gordon Gray. He's the Vice President for Banking and Financial Services with SunTec Business Solutions also. Gordon, welcome to the show, Breaking Banks.
Thank you, Brett.
Thanks for joining us. What's your background, Gordon? How did you come to be in the banking and financial services space?
I've actually been in financial services now for over 20 years. I joined Charles Schwab back when they were making a transition into full online financial services, brokerage, and banking.
Yep.
And so I've been involved in the transition since that time in how do you actually make the systems that are delivering customer experience build relationships with customers.
Right.
So this has really been my focus. I was the managing director of offer management and revenue management at Charles Schwab for my last 7 years there, overseeing all offer management and revenue management across all 6 enterprises.
Right. You know, it's interesting. My perception is, and you tell me whether you agree with this, but we've talked for 20 years about customer experience in banking, but measurement of customer experience in the past was pretty much limited to how long someone had to wait for call resolution in the call center, and what mystery shopping showed up in a branch experience. And it's only with this digital explosion that we're really looking at the entire brand experience. It's only a recent thing. Would you agree with that?
Absolutely, and in fact, one of the things that I wanted to ask you about, what I've noticed is that the adoption and engagement and the transformation to customer centricity and customer experience orchestration has been much deeper and much faster in other areas in the world than in the U.S. And I've actually seen a lot of mission statements that talk about this, but from an investment standpoint and a commitment standpoint, I haven't seen that type of momentum yet, except with a couple of the most innovative players that we're now working with.
Yeah, I think in terms of why that might be, there's potentially a couple of explanations for that. One is simply that there are so many institutions in the United States that to get sort of a systemic change across the board is difficult, particularly when 70% of the financial institutions in the United States outsource their technology. I think that's a definite. Where you got a market like Singapore, for example, or Australia is a better example. You know, the major bank like Combank makes a move, and the other 3 of the big 4 follow rapidly because the differentiation in the market is so clear. Whereas in the United States, with such fragmentation of banking, it's harder to really call out that differentiation or have that same experiential shift on a holistic basis or a mass adoption basis. That means, of course, that you look at the United States and when we talk about mobile banking in the United States, the biggest innovation in mobile banking in the United States has probably been remote check deposit capture, which is not been a focus of the majority of the rest of the world. And it's had the effect of this weird effect of, yeah, sure, it's increased mobile adoption, but it's also elongated the business case for checks, extended that, whereas the rest of the world's been abandoning checks as quickly as they could. So it's this US is a bit of a funky market in respect to some of that stuff. There's some unique things. I think it's certainly not the case that, I think many in the US would agree, although some might be challenged by this perception that the US is no longer the most advanced economy in the world when it comes to retail banking experience. I just don't. I think there are plenty of other examples outside of the world that have made faster improvements holistically as a system.
That is true. Yeah, I totally agree. And I have one other thought about this, which I'd be interested in your opinion about this. What I've seen, and Schwab is definitely an outlier because they absolutely did invest in this and have made a significant transformation already. But in most of the other institutions, what I'm seeing is a focus on regulatory compliance, or sometimes regulatory resistance, and What's missing in that is the view that we're finding outside the U.S., where if you actually shift to customer-centric capabilities, then you can flexibly meet the compliance and regulatory changes much more easily. And I don't see that understanding in the U.S. very often.
Yeah, no, I think you're right there. The regulatory issue and the transparency issue is one I think we should definitely get into. Coming off the back of the financial crisis, there's been a real push, at least for consumers, around transparency, particularly when it comes to fees, overdraft fees, and things like that. Interestingly, regulation is moving slower. I mean, you can just look at how regulators have responded to Bitcoin in terms of how long it's taking them to figure out a strategy in that respect. But this is a good illustration. Things are moving so quickly now with disruption of financial services and innovation in the space. I'm unsure whether regulators will ever be able to stay on top of that again. They're certainly not going to be able to stay ahead of the strategy. They're going to have to be a lot more responsive to these things. The interesting thing with the transparency angle is, I think it's closely related to friction, and it's closely related to the way you acquire and onboard customers, which is why in the United States, one of the reasons for this is as friction is increased around onboarding a customer with a checking account, for example, what you've had is actually a decline in the number of checking accounts in the United States, and the product that's been replacing that is prepaid debit cards, where the friction is much lower, but there could be argued that there's a transparency component to prepaid as well around overdraft fees and so forth, where they just don't have those fees, or it's one fee per month and that's it. It could be argued that there is sort of workarounds to transparency and the regulatory friction already taking place. What are you guys seeing on a global basis? Because you're dealing directly with this in terms of the revenue management side. How is the customer experience, or more importantly, the ability to generate revenue on digital, really pushing this forward? Because as branch activity declines and as revenue in the branch declines, we've really got to have a serious look at digital onboarding and revenue. Who wants to attack that?
Yeah, Brett, let me chime in here. Absolutely, this is definitely becoming a significant focus for most of the banks. And the fact that now not only other banks are coming into their space, it is other institutions are also taking away their revenues and profitability. So the revenue management is very key. So in this revenue enhancement, as well as revenue protection, which is already there, is the focus which they need to look at. So let me... we address this fundamentally in 6 key points. One is to helping them to become more customer-centric than product-centric, which means there's a lot of internal orchestration has to happen. The second aspect is about creating more value-based, innovative product and services offered to the end customer, almost to the specific customer needs. Ability to bring in that aspect. Along with that, when you're making that kind of offers, you're making not only product experience as well as the financial experience aspect. So managing that, tracking that experience, and making sure that that is orchestrated across all channels of touch point. So of course, this needs the subsystems also making use of the knowledge base which we are creating. So that's a little bit of long-term plumbing.
Yep.
Monitoring customer experience is a key thing. So this has got 2 parts. One is the real-time part, as well as the post and the batch or online part of it. Then the key and the most important thing is the customer trust. How do you bring in this process the customer trust? There are a couple of things which you can do. One is bringing transparency in every charge which you or charges which you're making. The other aspect is making sure that your commitment as per your offers is met.
Yep.
These are the key aspects.
Yeah, absolutely.
Right.
In terms of organizationally, and from a metrics perspective, apart from the technology. Are you seeing a systemic approach where we're seeing the org chart change around this as yet? Because I think that's got to happen. You've got to start to see a head of distribution that's not focused just on branches, as we've seen before, or someone overarching that's in charge of revenue generation that's independent of product. Have you seen any org structures develop that supports that sort of model?
That's a fantastic question, and in fact, it's one of the most interesting challenges that we run into, because without the vision of the target operating model, the organizational structure that needs to be put in place to actually support customer centric, when you've got, for example, just product managers who are only incented on the particular revenue and profitability of that one product line, they're not actually thinking from a segment success perspective or a customer success perspective. And so one of the things that we do, we actually come in and provide consulting to help the banks understand what type of organizational structures have been used as a best practice from the various clients we've worked with. And so we absolutely have seen it. We've also seen the consequences for slow adoption of this when you've actually end up with KPI conflicts. Yeah. So it's absolutely crucial to step back and think about this. And so some of the transformations we've seen from an organizational standpoint is to shift the focus of the revenue management to the segment manager.
Right.
And so the various segment managers then will take on chunks of customers and use systems such as ours in order to be able to see the profitability and the net margin contribution from the various activities of those segments in order to manage that and make that more profitable and effective for the firm.
No, I can see that, but you guys also deal a lot in big data. Isn't the nature of the data side of this, big data particularly, isn't it sort of to some extent deconstructing segments, because we're starting to look at the data differently rather than just 15 to 25, or 17 to 25, Gen Ys who use a smartphone. We're instead, I think, we're starting to see behaviors emerge that go across traditional demographics and don't fit normal segmentation models.
Yeah, absolutely. And in fact, so what we're now seeing, and this is, for example, with Absa Bank in South Africa, they're able to use our system to actually orchestrate a one-to-one type of offer with their customers at scale in retail. So this is something that without this type of system was virtually impossible in the past. So, but it still doesn't break the need for thinking from a segment perspective, because in essence, from a business management standpoint, to be customer centric, starting with that structure is necessary. But the next piece is actually being able to use big data effectively. And NK, you have a point there.
Yeah. No, but you're very specific. I mean, you raised a very valid point. What is important is to understand the customer behavior. And Absolutely. Just to give you an idea, let us give an example. One fine morning, one customer comes and buys, let us say, 100 check leaf. Normally, he takes only 10 check leaves. So that might be an indication that he might be applying for a loan, and this might be for predated checks to be given. So deriving intelligence like this, which can be used for on real-time interaction of that customer on your website when he comes for some information, that's the kind of intelligence which you're talking about, which we can orchestrate, right? So
that customer intelligence, responsiveness to customer intelligence is going to become absolutely key. So listen, guys, exactly. We've only got a couple of minutes left, so before we finish up, I want to talk about what's, obviously you've got a lot of investment in R&D right now in this area, but where does SunTec go next? Tell us what's happening in the next 6 months to a year.
Right. We as you know, we are fundamentally focused only on revenue management and business assurance, and we do that across multiple industries because we believe at some point there is going to be a huge convergence of many of these industries. I mean, that's maybe 10 years down the line, or maybe beyond that, where it becomes customer ownership might be with few organizations. So when you're talking, so that is the future direction. So to do that, we need to be building expertise in each of the industries and their behaviors and how customers are lacking to have that experience. Right. But one great opportunity what financial institutions do have is becoming the customer owner, if they truly become the trusted partner of the customers.
Yeah,
that is one of the areas. Yeah,
it's certainly owning the customer is one of these big debates. Does Apple own the customer now with Apple Pay? It's certainly I think that concept is going to struggle. But look, NK and Gordon. Thanks for joining us today. We've been talking to the team at SunTec Business Solutions, Nanda Kumar, the President and CEO, and Gordon Gray, the Vice President of Banking and Financial Services Practice.